Hey everyone, thanks for tuning in. I am CryptoVatsik. I would really appreciate it if you hit that like button to support the channel. And if you find this content helpful, don't forget to subscribe so you don't miss out on future updates. As always, this is not financial advice and these are my opinions only. Okay, let's go. Okay, so this video aims to provide you a macro forecast on Ethereum and by representation the rest of the market as a whole as to where we sit and what it means if you're looking to capitalize on the next bull run. I'll show you what I'm doing for my strategy and some critical triggers I'm waiting to see to confirm we're out of this bear market and entering an accumulation zone that will push us to all-time highs. Okay, so really quickly, I think it's important to just point out where we broke down on this previous bull cycle that we just had, okay? And so this is on the monthly chart, and I think it's really key to show you where we broke down just to give you a sense of where we're at and why this might have happened. This was I would say this was more of a difficult bull run to trade than others. This one was really vicious and it was predatory in my opinion, right? So we had a lot of different volatility. Not that we haven't had that before, but really in the previous cycle, at least that we can compare this to, is that we had really just like a nicer steady climb that really pushed us to our all-time highs rather than, these huge wicks down, huge wicks up and just stopping people out, liquidating, capitulating, and just liquidating people in general. And I think maybe leverage was really introduced into the market during this run as well, so it could have affected things and whatever else was going on in the world. But anyways, so basically what we had seen was we had this clear uptrend, okay, higher highs, higher lows, higher highs, higher lows, and then higher high to our all-time high here, okay? And so basically this was our low that pushed us to this last little wick up here. And so this is that key point right here where we'll take it from basically the candle close, but that was our first break in market structure, okay? So basically we came back up here and then it was the first time we made a lower low, okay? Instead of making this higher low from here, you got to take it from the local low. And then we had that break, right? And so then basically from that point on, we had a bearish retest here, and this would have been our, major high time frame order block up here, which you can see even respected. Sorry, one sec. Major bearish order block right here off this last green candle that we had. Okay, so that's where I'm taking it from because that's the candle that got invalidated and then broke market structure, and then basically had that bearish retest in this level in here. Okay, so that was a huge break on the monthly, and obviously not always obvious to see when you're not zooming out all the time. You're zoomed in, you're getting caught up on the lower time frame stuff, as do I. But essentially, this was our major bearish order block, and so that's how we ended up breaking down from that level. And so of course it just negates that common, I don't know, I'll say that common narrative that we're just in a dip. And people that think we're just in a dip just think that this is just basically a minor or a major correction within this bull cycle. And it's very tough for me to wrap my head around that, given the fact that we had this major break in market structure. We've had a drawdown from the all-time high of 82%, and just the overall time that this has taken too, right? Dips are these. When you're in an uptrend, you're still in a clear uptrend of higher highs and higher lows. You have brief temporary dips that are maybe 20-30% kind of thing, and that we don't have a break in market structure. Okay, it held these levels, and so that to me is just negates that narrative of being a dip. This is a market-wide correction. This is a bear market. This is essentially a collapse, if you will. Okay, so you've seen it back in 2018, right? If you're around, you experienced that, the same thing here. We had a 74% and then to our bottom 92% correction. It took many months to come to play out. We had a huge break in market structure. Okay, this is not a dip. All right, so okay, I think we've established that. We can move on. Is something similar to what we saw in our previous bear market, okay? And I'm not saying it's going to be exactly the same. It's a different market. It's a different everything right now, okay, right? But the theory, the methodology remains the same, because all we have to compare this to is looking left, previous price history, right? So what I'm going to do is I'm just going to show you the previous bear market in 2018, what we saw, and what I'm hoping to see now. Because it just to give you perspective of where we are, right? So I'm going back to the previous bear market. Okay, and I'm zooming right in, and I want to see this, right? So it's just a range, you guys. So just keep it simple here. So basically what we saw was we had this swing low, this swing high, okay, and this was a large pump. This was definitely a huge bear market rally, or perhaps a first impulse really of the second major wave that we got up here, right? So there's definitely some arguments to be made there with Elliott wave theory that this was our first impulse, and we saw it on Bitcoin as well, right? However, we retraced this one quite far down, all the way down to the bottom here. We did not break it, so it's still technically a higher low, so it's intact. But anyways, that's besides the point. What we saw was this range, right? So we had the swing high, swing low, swing low, swing high, sorry. And basically within that, there's all this interaction, right? With the EQ, okay, resistance over here, resistance, resistance, and then support, resistance, resistance, came back down above. And what we're seeing is it's playing around in this range, but we're not breaking this low, right? So we can come back up, we can come down, we can come back up, come back down, come back up, even drop like this, super nasty drop, but it didn't break that low. And then it's basically just laddering those ranges up, okay? And what I mean by that is just basically this. We'll get that out of the way for now. Okay, so what I mean by that is basically you've got a lower time frame range right there formed, okay? And then it broke out above, created a new range right there, okay? Boom, boom, and then broke out above, and then you guessed it, another range, okay? And so you're breaking the upside of the upper bands of these ranges multiple times over and over. And this was really when accumulation, and it started picking up. The market started picking up. I would argue more around in here. This overall zone is our area of accumulation. Okay, so this overall area in the yellow box here is really when people were scooping things up, scooping cheap coins up and accumulating for a long-term bag. And then really when you saw the strength come back, this was still pretty choppy. Right, so we were quite choppy in this area still. Came back up, came back down kind of thing, the COVID crash kind of thing, right? But then right here is when we really saw that steady base form, and you just saw this steady increase of no breaks in market structure, but higher highs and higher lows, and then continuously breaking to the upside of these ranges, right? So no breaks in market structure, maybe on lower time frames, yeah, you had some breaks in market structure here, but then it was quickly followed up by a pump. And really, when you start to see these ranges breaking to the upside and starting to ladder up, it's really no different than when you were in a bear market, right? When you saw these ranges form from the low to the high, okay, and then it breaks down, and then you get another range. Or before that, you had this guy, okay, range, break, bearish consolidation, break, range, break, right? And it's just this laddering down, right? Obviously, the trend is opposite. It's a bear market, but that's what you're seeing, just continuous strength and the trend and no real significant breaks in high time frame macro market structure, right? So you're just continuously making lower highs, lower highs, lower highs, lower highs. On lower time frame, you are getting these mini pumps and getting some higher highs, excuse me. But on a macro sense, it's intact, right? Just totally intact. Okay, until down here, yeah, sure, you could argue it broke down, but then that was kind of the final push to our market bottom, right? So that's what I want to see, right? So I want to see something like this. By this point, though, people have accumulated. Smart money has accumulated. So this is when the FOMO starts kicking in. Okay, and then in my opinion, you're a little late to the party if you're looking to invest. You can definitely trade these, and then this is when the serious gains are made. But the serious smart money gains are made when you're accumulating down at these areas near the bottom. Okay. And now the key to this is now the Bitcoin chart. Okay, I've just flipped over to the Bitcoin chart to give you another perspective. The key to this accumulation zone here is basically that we don't make a lower low, okay, and we start to gradually increase and start and get. This is when we really got that break in market structure right here, okay? So this is a huge point, huge break in market structure right there, where basically we were just ranging in here, and then the ranges started laddering up on lower time frame, another range laddering up, and then we had this was the key pivot right here, where we had that break in market structure, where we made a higher high, okay, and we never cracked this low, right? So over here, it was very tricky because we never really cracked the low either. And, this was just breaking down. However, it was, one of these descending triangles, right? So you're saying it's knocking on the door, it wants to come down kind of thing, but it was in theory intact at the low, but then obviously broke down. So anyways, that's my key rule, obviously, is to not crack that low, and it can come down really close. And you know what? Even into the future, we came all the way up here and then all the way back down, but it never cracked that low, right? And so that flat lining out where you start to see that steady growth like this recovery, these ranges, breaks and ranges to the upside, SR flips and then up, that is, that's our accumulation zone. And these things take time, unfortunately. And that capitulates people in and of itself, is just the time capitulation factor, right? So there's capitulation here. This is price capitulation, okay? This is liquidity capitulation. Absolutely, people are just dumping their bags. They're getting liquidated. They're getting smashed, right? This is price capitulation. And then there's such thing as time capitulation, okay? Which is basically just over time, as it flatlines out and it keeps coming down to the bottom, people are just getting bored. Then they think it's done, it's over, and they start unloading their bags, and then that's when smart money starts scooping it up at cheap prices, and it just takes a long time for it to come back, because then over here is when people start getting interested again. But by then, you're already that far up off of the bottom. Now, different time, different market, different outcome, right? So let's see what we're getting here. And you know what? You know what I think we'll get? I think we'll get something similar to what we've seen, right? History does not repeat exactly, but it often rhymes, as people always say. Okay, so I think it's coming. It's just going to take longer than we might expect. And so we just flip back to ETH here. Okay, so quickly, this is just what I'm seeing right now again, right? So I'm just drawing out a range from our low to our high, and already respected the EQ here, right, as support. So I'm not saying that the bottom isn't in and that we're going to come down further like we had before, where we had, our false kind of bottom here and then actually had a real bottom. This could play out completely different, and I'm not going to pretend I know how it's going to play out. I'm just saying that this is all we can do, is basically at the end of the day, we're drawing lines on the chart trying to figure this out, right? So here's what I'm seeing. And so we got this range, okay? And so as long as we hold this low, I would expect that something like this, we could, maybe bounce in between the top 50th percentile, potentially come back down, test one more time this low, and then we just begin looking for that accumulation range, that accumulation zone, right, that we talked about, right in there where you hold the low is intact, okay? You keep testing it kind of thing, but these are the areas that you want to identify. But if we start doing something like this again, which we've seen, where we, start to hover really around the bottom of this band and there's just no strength coming back in the market, then yeah, I will definitely reconsider if this is accumulation or not, or if this is just going to capitulate down, right? So eventually, ultimately, what I'm waiting to see though is basically what I've said. So we could play around in here for some time kind of thing. And, there's going to be a period where we're going to have that break, that ultimate break of this level or potentially a different level, right? Where we're going to have a massive SR flip. Okay. And so that's what I'm looking for here. And I'll show you just over here what I mean by that, right? And I've already mentioned it, but basically, right, where we get this range where we play around, we come up, we come down, we come up again, come down, but then ultimately, we had that major break here and that major level right here. So let me just get rid of everything here one sec. Major break in this level here that we couldn't get out of, right? So this was the ceiling that was keeping us down, and then we had that major spike and just smashed through it, retest, bullish retest, and then up. And in the meantime, you can look for this on lower time frames too, right? So if we're in a bear market, you come to a bottom, this red candle gets invalidated, there's your bullish order block, your break in market structure right here. That's your SR level. So we broke market structure here. Okay, came back down, retested it. Right, that level there, retested it as bullish retest, and then came back up kind of thing, right? So you can look for these plays in the meantime, but overall on a macro scale, you want to start breaking these levels and start laddering up those ranges. And just super quickly, this is the Bitcoin log growth chart that I've shared in my previous video that I'll post up here right now, as well as on my Twitter, that goes into this more in detail. So please go have a look at this video and look as to why I think this is going to play out a little bit longer than we expect, but I think the future is green. So go have a look, and thank you so much for joining again. Please hit that like button and support the channel. if you enjoyed this video, and we'll see you on the next one. All right, thanks. Bye.